Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, the beauty of mathematics, part 20. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So while we call it Bitcoin, the beauty of mathematics, I will remind you yet again that it is actually based on the entire cryptocurrency asset class, not just Bitcoin. However, we do know that Bitcoin does make up a large part of the cryptocurrency asset class by market capitalization. Now, one of the things that we've mentioned before is that the best way to model growth within the cryptocurrency asset class is using something called logarithmic regression. Okay, this is something that does account for diminishing returns. We have stressed since 2019 on this channel that diminishing returns is very much a real thing. It doesn't mean you can't make money in crypto. It just means you cannot assume what took place in a prior market cycle will identically repeat in a future market cycle because of the law of diminishing returns. Again, it's the same idea with anything really in life. I have my laptop right here and I have a computer monitor next to it. That works out relatively well. If I were to have 5 more monitors, at some point you get diminishing returns with having more monitors. Some of you are probably thinking, well, you'd love to have 10 monitors and you still wouldn't experience diminishing returns. But diminishing returns is a natural, I mean, it's a natural thing to occur, and it's something that we can observe has occurred within the cryptocurrency asset class over the last decade. And logarithmic regression, I think, best encapsulates the idea that we are experiencing diminishing returns over the macro scale, but we are still going to have phases of explosive growth within the cryptocurrency asset class. The growth within the asset class is basically just riddled with bubbles and then fearful phases. Okay, so rather than just go up in a nice steady line, let's say according to the red line, which is arguably the quote unquote fair value logarithmic regression fit to all data, which again is a monotonically increasing function, we can look at this and say, well, the fair value increases over time. But the actual value of the asset class as a whole, the actual market capitalization, goes through periods of overvaluation and undervaluation. And historically, the undervaluation areas are the best time to buy. The overvaluation areas, it doesn't mean that you need to sell it when it's in the overvaluation area, but as you get up into the upper region, you should expect that it will not be sustainable. And the closer you get to that region, the likelihood goes up that will come back down. So with that said, I look at this chart and I still think, as I've said before, I said this back in 2019 too, that there was no reason we would have a parabolic rally at the end of 2021. Nothing in the data suggested that. And in fact, for us to have gone to those several $100,000 Bitcoin prices and then the associated altcoin pumps that would have come with that, that would have taken us up to the top of the band relatively quickly. And I said I think that's too quick of a timeline. Now, with that said, where are we today? Well, as of February 1st, 2022, the total crypto market capitalization is coming in at a very modest 1.76 trillion, with the fair value logarithmic regression trend line coming in at a more humble 1.32 trillion. Thus, this represents a slight overvaluation of the asset class of approximately 33%. Okay. And what we want to do now is we want to try to identify, okay, where are we? What could happen over the coming years? And based on these scenarios, and obviously you guys, I'll talk about the scenario that I think is more likely to play out. We'll talk about a couple different scenarios and how you can use it to navigate the asset class. One of the things I have found in this asset class is that rather than having a prediction at all times to say exactly where a price has to go by a certain period of time, you're so much better off being conservative and then being pleasantly surprised when you're wrong. Okay, so stay conservative And then when you're proven wrong and it goes up more than you think, then be pleasantly surprised. That's the best way to navigate the asset class. But also, the best way is to not necessarily make your investments, not financial advice, of course, but not necessarily make your investments based on a certain price prediction by a certain period of time. If anything, we've learned from the stock market, it's that if you need something to happen by a certain period of time, then you will often be let down. The power comes from not needing it by a very specific period of time. Okay, so you can see now we're only about 33% above the fair value. Note that back in mid 2021, we actually came closer to the fair value. One thing, though, to consider again is that the fair value is a monotonically increasing function, meaning it always moves up. It always is slowly increasing. So looking at where we made it to back in the summer of 21, that would actually be considered undervalued today, or maybe slightly right on the fair value. Okay, but you could argue that it would actually be slightly undervalued today. And you might say, well, why? We're at a higher market capitalization today than we were back then, so that doesn't make any sense. Again, you're comparing it to a reference point that is dynamic, and the reference point changes. So if the reference point changes, then you have to understand that an undervaluation or an overvaluation over here would actually be a very undervaluation over here. Okay, so the longer we go, the higher the prices of the asset class should generally trend. That's why we always say time is on our side. We can see that as we go through time, the asset class should continue to appreciate, even though it is fueled by various boom and bust cycles. So one of the things I've looked at before is the idea that, every cycle seems to take longer than the prior cycle. And I understand there's a lot of people now calling for Bitcoin to go back to 10K. If you're curious why they're calling for 10 to 13K, I've seen a lot of people call for that. One thing I've found is to try to figure out why they're calling for that, and to see that, okay, well, they're calling for it because they're basically assuming that Bitcoin has to drop 80% from $69,000. And why do they assume that? They assume that because any time in the past when Bitcoin put in a major market cycle peak, we did see it drop by approximately 80 to 85%. I think in 2011, I think it dropped like 90 to 95%. So this is the reason why they are calling for that. Now, I think the argument maybe against that is, well, normally 85% corrections in the market are preceded by a blow-off mania phase, not an entire year where the market just goes sideways between, say, a $30,000 and $60,000 Bitcoin. So there is some evidence to suggest that while it is theoretically possible that Bitcoin could go to any price, it also seems like we are still generally trending up with time, and that part of the issue was the overwhelming expectation that Bitcoin had to go to a several $100,000 valuation by the end of 2021, based on what it did in 2017. And I think a lot of people feel like they were let down by that idea, and it didn't play out like they thought that it would, or they followed various models that said that it would, and therefore it's been difficult ever since that time. But you should know that even the models that called for those prices, at the end of the day, they're all just models, right? And one of the things we say on this channel quite frequently is that all models are wrong and some are useful. And that goes for my own models too. Not all models are going to get everything correct. And in fact, there is not going to be a single model that gets everything correct, right? There just isn't. The stock to flow model is a very popular model, especially recently. And while it didn't hit the targets that were discussed, it still did at one point in time after the halving fairly well capture the appreciation of Bitcoin following the halving. So again, it goes to show that not all models are going to get everything correct, right? But there are useful parts of every model, right? Well, most models, right? Maybe there's some models that are not so useful, but all models are wrong. Some are useful. Okay. So, I look at this and I say, well, as far as I'm concerned, we're still basically on track as to where we should be heading over the next several years. And my thesis all along is that the asset class, I believe, will hit approximately $10 trillion sometime in 2023. If it hasn't happened by the end of 2022. Like the earliest I think it could happen realistically would be the end of 2022. But I think it would be more likely to happen in 2023. Now, you should know there's always a probability that that doesn't play out, right? We have to accept that any model might not play out in the exact way that we expect, but it is the model that we've been tracking since 2019. So I will continue to track it, just because the predictions for the end of 2021 that other people had didn't play out does not necessarily mean that other models that were a lot more conservative are destined to not make it as well. So I did want to talk about, where are we today? And again, the asset class as a whole is now overvalued by only 33%. You might say, well, that sounds like a lot. And it is a small amount, but I would ultimately expect a market cycle peak to be overvalued by several 100%, not just to say a 33% overvaluation from where it is today. So continuing on, one of the things we can do is we can identify prior market cycle peaks that happened at the top of the upper logarithmic regression trend line. We can see one in 2011, one in 2013, and then one in late 2017 that bled into 2018, because again, this is the entire asset class, not just Bitcoin. And we know that altcoins had a field day in early 2018. We can also identify local tops, and we saw one in 2013 and mid 2013. We also saw one. 64K, it certainly wasn't a market cycle top, since we did go to 69K about half a year later, and arguably 69K is also a very significant high. Doesn't mean it's going to be the market cycle top, but there's always a probability for everything. But one of the things you do know, and that I've said before, is that 64K, as far as I can tell, has been a lot more significant than 69K. From a social perspective, social metrics that I'm looking at, on-chain metrics, as well as just looking at how crazy the market was back then, how it died down in the summer, and then we sort of had like a relatively pathetic bounce to a new all-time high, and then we just came back down to where we were in the summer of 21. So I think that one thing is clear, and that is, and we've said this before, every cycle will be different from the last, okay? It would be foolish to assume that every cycle will play out the exact same way. And if you do assume it's going to play out the exact same way, which you shouldn't, but if you did, you should at least account for diminishing returns. If you just draw a fractal saying that it has to repeat exactly what happened before, then I do think you will not hit the mark that you're looking for. Now, one of the things we can do is we can take the percent difference between the total crypto market capitalization and the fair value logarithmic regression trend line, which again is a monotonically increasing function. The reason I say that and I stress that is because the reference point to the overvaluation or undervaluation is constantly changing. And so you get something that looks like this. And the reason why the fair value is dynamic is because we expect that time is on our side. But additionally, you need to remember that it's dynamic, and it's shown here. The fact that 64K and the altcoin appreciation that came with that technically went to a higher overvaluation than we did back in November. And that's seen here. You can see that this one was more significant than this one. And so that's why I think that really we should be focusing more on 64K than the $69,000 level. But we should note that $69,000 is, of course, the all-time high. So when I look at this chart, I would simply draw a very dubious line indeed and say, well, historically we are able to come up to the top of this downtrend line on the macro scale. We've hit it 3 times now. We hit it in 2011, 2013, and then 2017, early 2018. And we have yet to come to it again this cycle. Now, it doesn't mean we have to go to it, but I still am holding out hope that we will make it there either late this year or in 2023. And we can see the counterpoint to that is to say, well, if you did not operate deterministically, which you shouldn't, right? You shouldn't assume anything has to happen. But if you didn't operate deterministically, which is the best way to operate, and you say, and you just manage your crypto portfolio based on undervaluation and overvaluation, it's if it goes up here, then it's more likely to go down following that. If it goes down here, then it's more likely to go up following that. Okay, and we've seen this play out many, many times, right? When it comes up to this level, it goes down. When it goes down to this level, it goes up. Up here, it goes down. Down here, it goes up. Up, down, up. Okay, so it just repeats itself. So think about how you feel now in the market, right? And think about how the market hasn't really done what you wanted it to do in 2021. I mean, a lot of altcoins did put in crazy gains in 2021. Let's not kid ourselves. But Bitcoin didn't really do a whole lot. It basically was just between 30 and 60K for like 99% of the year. So right now, Bitcoin I believe is trading for like $38,000 or something. So think about how, and again, this is not meant to say that it has to happen this time, but that in some future instance, you will feel the same way you do now after a price depreciation, and it will keep falling. Okay, whether it happens now or not is somewhat irrelevant. But if it does happen now and it comes down to here, imagine how bad you would feel in that case. Like imagine how hard that would be. That would be the area of, if a lot of people have said, well, I really wish Ben would make another accumulation of a lifetime video for Bitcoin or Ethereum. I can't do that until it is an accumulation phase of a lifetime, right? So when I made that video on Ethereum, it was trading for like $200, okay? When we talked about that for Bitcoin, it was trading for a few $1,000s. To make it here, when we're right at the fair value, it wouldn't be that genuine, okay? It doesn't mean that Bitcoin can't go to 150K over the next year. It doesn't mean that. It just means that it's not like the accumulation phase of a lifetime. The accumulation phase of a lifetime comes when the asset class is in the undervaluation territory and sometimes undervalued by as much as 60% or so. Okay, so that would be where the undervaluation comes into play and where the accumulation phase of a lifetime comes in. But now the question is right, like, well, do we have to come back down here? Can we come back up into this region? Well, it's hard to know what's going to happen in the short term. But we know that. I have no idea what's going to happen in the short term. I do think that even if Bitcoin is going to move to new all-time highs, it's going to be a longer process. Like it's probably not going to happen over a couple of weeks. It's going to take some time to get there. But even with that said, the idea of a mania phase doesn't happen over the course of 1 or 2 months. It takes a long buildup going into it. If you think about it, back in 2020 and 2021, we had this capitulation down to $3,800, a very quick run up to around $6,000, then a move to $10,000. We spent about 3 or 4 months at $10,000 or just below it, right around that level. And then we had a parabolic rally that took place over the course of approximately 6 months: October, November, December, January, February, March, and then briefly going into April. So if we think about a parabolic rally lasting typically for that many months, it still seems silly to think that there's going to be a parabolic rally in Q1 of 2021. That doesn't mean that Bitcoin can't trend higher, but manage your expectations and don't assume that it's going to be hitting 100K this quarter. Okay, I mean, it's already February. Okay, so try to take a step back, realize that, look, this is a marathon, not a sprint, right? It's a marathon, and that the people who do the best in crypto are the ones that stick around for the longest. So I'm still holding out that we will eventually hit this upper trend line up here, but note that at some point, whether it happens now or in the future, after we hit this point, there will come a phase, in my opinion, where we will go back down to the undervaluation territory. And whenever that happens, that is the accumulation phase of a lifetime. Okay? Until it happens, then we are not necessarily out of accumulation territory. It just isn't the best opportunity that you can get in crypto. But it could be the best opportunity you get for a year or something, right? Like we don't know. If the asset class continues to balloon to $10 trillion by, let's say, the middle of 2023, and then it goes into a bear market for a year or something, then you have to assume that at that point, a lot of people would not want to be buying crypto, but that would be the best time to buy. So to give an idea about this overvaluation, undervaluation stuff, right now, the asset class is at about 1.76 trillion. Okay. So for the current asset class's market capitalization to reach the fair value, it would just take until mid 2022 for the asset class of going to go sideways. So basically, if the asset class just trended sideways for the next 5 months, then we would be at the fair value. Okay, because we're assuming the asset class appreciates with time, or at least the fair value appreciates with time. The market just doesn't always realize what the fair value is, I think. I mean, you could argue that the market, whatever the market's trading it for, that is the fair value. But I do think it's pretty obvious that there's these boom and bust cycles that are fueled by mania phases and then fear phases where we go below what it should be trading for. Right now, I would say we're still above the fair value. And the party could still theoretically go on for quite some time as long as we don't get some dump down here. If we do have a dump all the way down here, then we're probably going to spend a while here, like a year. Okay, so do consider that. It's not what I think is going to happen, but it is something you should consider. For the current market capitalization to get to the undervaluation territory, meaning like the best buy you're ever going to get on Bitcoin, would be the current market cap. It would basically be out in 2024. So basically the assumption is that if the asset class somehow was at this valuation in 2024, that would be a crazy opportunity, an opportunity that would hardly ever present itself. That would be at this current valuation. In order to get to a $10 trillion market capitalization for the asset class, the earliest it could happen, according to this chart, would be the summer of 2022. Now, I think realistically, we should say the end of 2022 seems a bit more likely. Again, with the idea that it takes a long build up to this stuff, and you're not going to see it happen in just like a few months. It would take quite a long period of time. Technically, this shows that the earliest a $10 trillion asset class could present itself by the middle of 2022. I would argue that it's more likely to be late 2022, and then if not in late 2022, which was always the earliest I said it could happen, probably out in 2023. Okay, and so that's basically what we're looking at, and so you're sort of looking at. I'm looking at this target over here. I have no idea what's going to happen in the short term. I have no idea. Bitcoin could break through. I think it's at 38K. Could break through 39K, go to 40K, and not look back for all we know. I know there's a lot of people calling for lower prices, and hey, look, you're not going to hear me say that we can't go lower because we always could. But there was also people calling for lower prices in March of 2020 after we dropped, and then the lower prices never came. So just remember, the sentiment you see expressed on Twitter and expressed on YouTube is basically just a culmination of your emotions because people are just saying what they think, and what they think is probably what you think, and what you think is probably based on what the last 4-hour candle has been for Bitcoin. So when we look at this, I want to just try to keep people, focused on the big picture to say that, look, I still think the asset class is trending to approximately $10 trillion by either late this year or 2023. But I also admit that in the event that doesn't happen, it would only present the best buying opportunity that you're ever going to get. Okay, so my expectation is that the asset class trends higher to approximately 10 trillion, plus or minus a few trillion, right? It's hard to know exactly. But that really what matters the most is that the asset class is generally trending up with time, and that the people that stick it out for the long haul are the ones that I do think will ultimately prevail. And when we talk about this idea of going to approximately 10 trillion, people always ask me, well, is it going to make it to 10 trillion? Is it going to go higher than 10 trillion? You can look at the logarithmic regression curve and kind of see what it shows. I mean, 10 trillion would sort of be where I would expect it to be possible by the third quarter of this year. It would be a theoretical possibility, but that realistically you shouldn't assume that the very first time it hits a milestone is when the asset class will get to that milestone. For instance, if you assumed that by the time the asset class we're going to be at, I'd say 1 billion, you can see that it actually took a couple more years for it to get there. For it to get to once it crossed 100 billion, it took a while for it to get there. It hit 1 trillion almost at that point, right? And it hit 100 million just briefly after passing it, right? So it hit on the upper regression band, hit 100 million here, and then we actually hit it just a few months later. So here we're going to hit 10 trillion, the upper green line. So again, I'm not saying that we have to hit it at that point. It's just that this model shows that the earliest allowable $10 trillion asset class would be about Q3 of 2022. That would be the earliest allowable, but that it's probably not the most likely, and that the most likely is somewhere out over here. So at the end of the day, I do expect the asset class will trend to approximately $10 trillion. Plus or minus a few trillion. And as we go to sleep at night, we cannot help but wonder, what's a few $1 trillion among friends?